Economy in 2025. The U.S. economy in 2025 is experiencing a slowdown, with concerns about a potential recession growing among economists and policymakers. The Federal Reserve's GDP tracker estimates that first quarter a decline from previous projections, such as consumer spending and housing market activity, show signs of weakness, leading some analysts to worrying about an economic downturn. One of the biggest warning signs has been the recent spike in jobless claims, partially driven by layoffs in the federal workforce due to cost-cutting measures. While the unemployment rate remains relatively low compared to historical averages, these developments suggest that the labor market may be cooling. In response to these challenges, the Federal Reserve has started cutting interest rates from their multi-decade highs in an effort to boost economic activity. However, this policy shift comes with risks, as inflation remains a persistent issue. If the Fed cuts rates too aggressively, it could trigger a resurgence in price increases, further complicating economic recovery efforts. Public perception of the economy remains highly polarized, with opinions largely influenced by political affiliation. A recent Harris poll found that 51% of Americans believe the economy is worsening, while only 20% feel it is improving. This divide is particularly evident between Democrats and Republicans. Optimism among Republican voters has risen sharply, with 39% now viewing the economy positively, up from just 8% a year ago. On the other hand, 69% of Democrats believe economic conditions are deteriorating, despite indicators such as a strong stock market and historically low unemployment. One of the most contentious economic policies in 2025 is the debate over tariffs. The Trump administration has hinted at imposing new tariffs on Chinese and European goods, which could disrupt global trade and lead to price increases for American consumers. Business leaders and economists are closely watching these developments, as any significant trade restrictions could have a ripple effect across industries, impacting everything from manufacturing to technology. Looking ahead, the U.S. economy faces a complex mix of risks and opportunities. Policymakers must carefully balance economic growth with inflation control while managing rising national debt levels. Global factors, such as geopolitical tensions, supply chain disruptions, and energy market fluctuations, add further uncertainty to the economic outlook. The technology sector continues to be a bright spot, with advancements in artificial intelligence and automation driving investment and job creation. However, these innovations also bring concerns about job displacement and wage stagnation in certain industries. Real estate markets remain sluggish due to high mortgage rates, making homeownership increasingly unaffordable for many Americans. As the year progresses, financial markets, businesses, and policymakers will need to navigate these challenges strategically. Whether the U.S. can avoid a full-blown recession will depend on how effectively economic policies are implemented and how resilient consumer and business confidence remains in the face of uncertainty.